Good morning, everyone. Well, currency wars indeed. Yesterday's actions demonstrate perfectly what the G7 and G20 were trying to explain, that monetary policy aimed squarely at domestic conditions can have dramatic effects on the exchange rate as an unavoidable side effect. First, the minutes of the Bank of England Monetary Policy Committee meeting showed that 3 of the 9 members, including Governor King, had voted for more quantitative easing. The Monetary Policy Committee went even further and discussed what might else be done on top of quantitative easing to stimulate growth. This is in the context of an economy that's contracted in 4 of the last 5 quarters. Sterling plunged on the news. A few hours later, the minutes of the latest FOMC meeting were released, showing that several members were considering when the Fed should start winding down its quantitative easing, as the economy in the U.S. appears to be on what they called a moderate growth path, and they thought, quote, there had been some reduction in downside risks facing the economy, unquote. That caused a general dollar rally against virtually every currency, including a further drop in sterling. The likelihood that the Fed would start to change policy this year, or at least start to consider changing policy, was one reason why I've been expecting the dollar to gain over the course of the year, and this report only strengthens my conviction. Eurodollar was of course hit in the general dollar rally, but it was more than that. The euro lost ground against the yen and the Swiss franc as well, indicating that money is moving out of the euro overall as confidence in the US economy and the dollar improves. On the other hand, there have been no further developments in the Eurozone recently to build confidence in the euro. We'll see if maybe today's purchasing managers indices provide that impetus. The Eurozone PMIs are expected to improve, while the US ones are forecast to decline slightly. Will these short-term fundamentals trump policy? I expect policy to win out and for the dollar to continue to gain. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.